I am here with Mike Infinger from Infinger Insurance as part of my series of doing videos on kind of educating people about new home purchases and things they may not know. I decided to tap into insurance and what some people you might come across and know about home insurance.
Okay.
So he's got some really good ideas.
Yeah, so, and if you think of something after, if this goes on the Facebook or something, you can message me and I'll answer that too. But I wrote down a few different things. The first thing is at our office, we always stress the importance of the endorsements on the policy, meaning a standard policy won't include things like sewer backup, right?
Okay.
But our office won't do it without it, right? Because when you have a sewer backup, you're expecting your insurance to cover it, but it's not on a typical policy. So that's one of the things, and there's lots more endorsements we can go over. There's things like jewelry limitations, sporting good limitations, all those kind of things that we can go over if you're a customer of ours that we'd want to make sure that you understand. But I'd say that's a big one. The other one is what's covered. So there's lots of questions, and even during a claim, I'm not supposed to say yes or no. I'm supposed to say, we can get you turned into a claims adjuster and then you can find out, essentially, right? Because I don't even know. But as a rule of thumb, here's what's not covered. Flood's not covered, ever, unless you buy another policy. So there's policies through NFIP or through private flood that you can get for flood insurance. Earthquake is not covered unless you buy an additional policy. Landslide's not covered unless you buy additional policy. War, terrorism stuff is not covered. And then the big one is maintenance is not meant to be covered. Sometimes it can be. So roof is an example. So in 2018, I think me and every other insurance agent was ready to quit being an insurance agent.
It was a hailstorm,
right?
Hailstorm
of April 2018. And so most of the time, insurance is meant to put you in a similar position as you were before. But with roofs, for most insurance companies, it's replacement cost. And that means they'll actually put a brand new one on if you have a covered loss, right? So anyway, that's a little bit one that's a little funkier than normal is roof type things. But those are things that are for sure not covered on a normal policy, is those different things. Okay. You want me to go right into the next one?
That's good.
All right, so the next one that we get a lot of questions on is billing. And as you know, when you get your loan, most of the time, again, this is not all the time, most of the time it will go into an escrow. So if your premium is $800 or whatever, then your escrow account actually will bill you with your loan. So 800 divided by 12, and you're gonna pay for that on your insurance. Which I didn't actually write this down. On your home insurance, it is guaranteed, for the most part, to go up every single year. Unlike car insurance, it can stay the same, go up or down. Home insurance will go up because there's inflation guard on almost every single policy. So it'll go up 2, 4, 6%, whatever amount that you select on your policy. And so you're actually getting more coverage every single year. So your home insurance will go up by a little bit every year, even if the rate is the same.
And that makes sense because sometimes we'll get people who call in about their house payment. Like, why did my house payment go up? And it's property taxes or homeowners insurance. Those things do go up.
Right, yeah, property taxes were a killer this year.
Yeah.
big increase. Yeah. With the cost of all of our homes going up, which is a pro when we go to sell them, they also assess us at a higher rate. Cost versus the loan amount. So when she sets you up on a loan, she has a number that she needs, $600,000 or whatever for your home. What it may cost to replace your home may or may not be $600,000. It could be $500,000. It could be $900,000. And so our systems, and each one, we're an independent agency, but each home insurance carrier has their own replacement cost calculating system, and it's supposed to be tied in with current trends. So it's supposed to know like what Home Depot is charging for 2x4s and OSB sheets and everything that went crazy with COVID.
Yeah. And
it's supposed to give you a good guess of what it would cost to replace your home. And for most insurance companies, whatever that number comes to, so if it's $590,000, they'll tell you that is the least we'll insure it for. And we're not guaranteeing that's what it would cost to build, but that's the least that we'll do it for. So then it's up to the customer to say, yeah, I feel comfortable with that. And then going back to that endorsements part, on our policies, a lot of them will have a 25 or 50% extension. So it'll give you some leeway. So if it burns the ground, you could have more than what you're insured for that'll actually pay out. But again, it's just the minimum that they'll insure it for. So Fire station. So there's what they call protection classes with insurance, and the lowest possible in Idaho Falls is a 2, and the highest possible is a 10, and that's all based essentially off of how far you are from a fire department, and if that's a volunteer or paid fire department. So, for example, in Idaho Falls, the best possible one's a 2, but the best possible in Ammon usually is a 4. Just because their fire department isn't as big as Idaho Falls. However, most of the time, anywhere under 5, you're still getting the best possible rate, usually, with most insurance companies. So it doesn't really matter if between Ammon and Idaho Falls, but yeah, the best possible would be like right next to the fire station in Idaho Falls. You'd be at protection class 2. That's the best rate.
Okay, so protection class 1 to 5, kind of the same premium there?
Mm-hmm.
Okay.
Yep, and then once you start getting into the 6, 7, 8s, 9s, then it definitely surcharges you. 10 is basically not protected year-round, so some places in Island Park, if they don't maintain the road throughout the winter or something, then it'd be a protection class 10, and then they really surcharge. Other things, claims. So we have so many people that will come to us and they're like, well, I called my insurance agent, he said it was covered, and I've been paying insurance for the last 20 years, and so I wanted it covered. And then they're like, oh, and I had that one other thing. So as a rule of thumb, if you have 2 claims in a 5-year period, they don't care if you've had insurance for 30 years. In the last 5 years, they look at it. Some companies only look at 3. But in the last 5 years, if you've had 2 claims, it gets super difficult to find a policy that's for a good rate. And if you have 3, it's almost impossible. So 3 plus. There was a carrier, I don't think they do it anymore, that used to insure your cell phone on your house insurance policy. So people come to us with like 5 claims on their record. Like, well, it was only a $300 claim, but it's because they were insuring their cell phones on their house insurance, and then they were turning that in, and it counts against them. So be careful what you turn in. I always recommend, if you have the funds, if it's $1,000 or less, even if it is covered, don't do it. It's not worth it. Because even 1 claim, they'll surcharge you. Most companies will surcharge you. And like I say, 2 claims, you start getting right on the edge of who will even take you anymore. And 3 plus, the only place you can get is high risk, which means you'll be at least double what your normal home insurance would be. Credit score. So I was actually talking with Brittany on this before, but your credit score does affect your rate with most companies. We do have some that it doesn't affect your rate, no matter if it's good or bad. But for the most part, if your credit score is really low, your insurance will be higher. If your credit score is really awesome, then your premium will be lower.
Those are really good things to know, because a lot of people don't have that information. So it just kind of helps, I don't know, those first-time home buyers, work on your credit, get better credit. That'll help a lot of things, your interest rate and your insurance premium. And then, yeah, those claims, that's great advice. Don't turn in your cell phone on your homeowner's insurance, because that's, what if you really got in a car accident or something that you had to turn a claim in for?
Yep.
So is it interchangeable, homeowner's insurance and auto insurance, or are they 2 separate?
For the most part, no. Home insurance doesn't really care if you've had car claims, and vice versa. There are sort of some cases where they care, but it shouldn't affect you. So if you had 8 speeding tickets, your home insurance with me, for the most part, would be good. Doesn't matter if you've had 8 speeding tickets.
You'll just have really high auto
your auto insurance rate will stink.
Okay. So on that topic, I know a lot of people probably know this, but does it help your homeowner's insurance premium and if you have your autos on there and vice versa?
Yeah, for sure it does. So the funny thing is mine is not bundled, because even with the bundle discounts, my auto was better to keep separate than my home. So, but for the majority of the time, it's usually better to bundle. But each company does different things too. So for example, if you have a trampoline, then there's only so many companies that will take you or that will cover it. So some companies will be like, yeah, we'll still insure you, but we're excluding trampoline liability. And so there's some times where it's like, yeah, it doesn't make sense to bundle. Most of the time it makes sense to bundle for the customer.